Good evening and hello, everyone. Thank you all for coming in to this session. The last, or amongst the last, of these amazing 3 days. We've all had a very busy 3 days, and we've had so much food for thought. And I hope that we will give you a little bit more before you're ready to go home. I would like, first of all, to welcome my panelists. First of all, let me introduce myself. My name is Siba Audi. I am the senior anchor and editor-at-large at Asharq with Bloomberg out of Dubai. I'm also the founder and CEO of Saba Consultants. We consult for governments and companies in communication strategies. And more importantly, my panelists here, first on my left is Pankaj Gupta. Pankaj is the co-founder and co-CEO of Gulf Islamic Investments. And to his left is Hussein Abdullah, who's the co-CEO of Q Invest out of Doha. And further on the left is Iqbal Khan, the CEO of Fajr Capital Limited. And we're here to talk about the future of Islamic investment, which seems to me, I mean, it's only, 5 words, but it's a very, very broad and very wide subject, and we're going to try and capture as much as possible within the next 40 minutes or so while we're all here together. So Islamic investing is seen not as a religiously guided investment, but also as an ethical form of investing that promotes real economic activities that are socially desirable, that also generate competitive investment returns and encourages ethical business practices. It's a great definition. We're going to break all that down. Islamic finance has a current global asset value, and please do correct me if I'm wrong, about $2.5 trillion, some of the last numbers that I've seen. In the Middle East, Islamic finance, or Islamic banking specifically, grew by about 14% on average in the recent years versus 8% only for the conventional sector. Over the course of 2022 to 2023, S&P Global Ratings is expecting Sharia-compliant lending sector to grow by another 10%. Islamic finance, therefore, has done quite well, amazingly well, I would say, but it's been around for about, 30, 40 years? But the products remain largely unchanged, it seems. So it is time to innovate, and it is time to digitize, and I think my panelists agree. I would like to start by asking how conducive really to innovation is the Islamic products market. Let me start with you, Hussein. Oh.
First, thank you very much.
You're welcome.
Second, I think I would start, answering your, I would say, introduction, if you don't mind.
No, please do.
First of all, I think Islamic finance at this point of time is an attractive to a lot of the traditional investors or funds, simply because it's an option for them, or a new pool of capital to attract. If you look at today's environment, you would see a lot of conventional products, and you would see dryness in cash when it comes to to those products. So there's a lot of competition out there in the conventional space. Hence, the conventional space are now looking at diversifying away from the traditional capital, source of capital, to the Islamic, capital. And the only way for that to happen is going to basically satisfy the scholars. So there are 3 steps. There's a structuring element. There's the Islamic finance. The underlying financing needs to be Sharia compliant. And the third element is the fatwa, where what makes it basically Sharia compliant, where conventional and Sharia compliant investors can invest in. In terms of products themselves, if you compare between the traditional products today and what's happening today in the world, automation, this was a panel we covered last year, but I'm happy to shed some light there. I think what's interesting here in the market, in the GCC, that yet we did not automate most of our processes within the financial services in general. and there's a great opportunity here to develop. One of the interesting topics here is, going to a comment of the central bank governor of the Saudi Arabia in the last year's panel is the capital and the automation needs to be channeled through the central bank. It needs to be governed. It needs to be under the supervision of central banks. Today's products, whether it's crypto, whether it's whatever products out there, are not something that acceptable in this region. The way it works is we as Islamic institutions or investment banks, we need to create products. And one of the ways of doing it to be basically approved by regulatories is having an asset.
Right.
If it's not based on an asset, it will be difficult for regulatories to approve it. And one of the ways is obviously tokenization through blockchain.
Okay.
As an example.
That's one example of what the future of Islamic products or Islamic investing could look like. Before we get to the future, I'm going to be a little bit controversial, and I will ask everyone's forgiveness ahead of time. And I will ask you, Iqbal, Islamic finance has picked up, but it could pick up a lot more. It could pick up a lot more. It's still a very thin sliver of what traditional finance is. Is there a stigma in the name?
I think that just Islamic finance is about Islamic banking and also asset management.
Mm-hmm.
So the banking side has grown significantly. Today, the global Islamic banking market is in excess of $2.9 trillion. But we have a like-for-like product comparison between Islamic financial institutions and conventional banks. Competitive, good service, they have embraced technology. Where we have lagged behind is in the asset management in the real economy. The ability to service pension funds, endowment funds, zakat, awqaf, and more importantly, takaful companies, in order to create alpha for the institutional investors who are asking their money to be managed in a Sharia-compliant manner. So just to give you an example, in Malaysia, the pension fund has an excess of $156 billion under management. 68% of them have ticked the Islamic first option, and they have less than $1 billion invested in a Sharia-compliant manner. And the point which I agree is that they can only invest if we offer them competitive propositions. And that can be done if we have more asset management firms, such as my colleagues here from Q Invest and others, who can go out and offer that proposition. So that is the area of huge growth.
Absolutely. I fully agree with you. So why do we not have those channels? Why do we not have more products? Why do we only have, why does Malaysia have only $1 billion to
So
invest?
as you said in the beginning, that this particular way of investing has been done for last 30, 40 or 50 years. I think one is that the industry or this way of investing and banking is growing. Although the fact of the matter is there is initial stage. And I think like any other business or sort of an industry, you need committed players.
You need
Committed players,
Yes.
right? And it's a bit of unfortunate situation that few years back, and I'm talking about from 2007 onwards, when there was a wave of Islamic financial companies, institutions that started coming, but they were not running on merit basis. So a lot of them closed down, right? So I think there was a lack of will to run an Islamic institution on merit basis. People thought like, okay, I'm having a name Islamic, money would flow in, capital would flow in, and I would thrive. As Iqbal said, most of the investors, irrespective of whether conventional or Islamic, would look for merit. So in my opinion, the reason there has been a bit of a bumpy journey because most of the institutions which started in initial years, they were not focusing on the need of the audience. So it's extremely important to understand that whether Islamic or not Islamic, the merit has to be there. So Islamic products, if they are offering similar or better returns, or better quality, or better risk-adjusted return, they would thrive. And I can give you an empirical evidence, and I'm not there to speak on behalf of GII here, but the fact that our company grew in 9 years, last 8.5 years, from $0 to $3 billion, we are pure Islamic investment company, and we are doing business globally. Globally means you ride from US to India in all kind of sectors we are doing, and we are doing it very successfully. I would say it is one example that yes, if you do business on merit basis, there are enough takers. And I totally agree with my colleagues.
There are enough opportunities for you to
100%.
spend your money.
Yes, yes.
Right. Okay. So I want to bring up the issue of ESG, and I want to bring up the issue of the sudden rush towards ESG investments. Can we draw parallels? Of course we can.
100%.
We can draw parallels between Islamic investing and ESG
Can I give you an
investing.
example?
Please give me an example.
So see, Islamic investment, we all know one important thing, zakah.
Right.
So we are supposed to pay. What is zakah? It is nothing but CSR, right? It is the responsibility of the ecosystem. It's the responsibility of the stakeholder that whatever you are doing, you are making money, you are sharing with the society at large. What is ESG? In my opinion, ESG is a new name to Sharia-compliant investment. We are talking of environment, we are talking of sustainability, society and governance. All these three things are in a way derivative of CSR. And zakah, which is a basic principle of Sharia way of investing or Sharia way of running operation, is right from there one.
Okay. So Hussein, why this sudden rush towards ESG investments, but that we have not seen towards Islamic investments? Not in the same scale or degree.
Listen, I think, in a way, Islamic principles takes, in a way, ESG into consideration. If we take, some
Which is the broader? Which do you think is the broader
I
one?
think Islamic covers, ESG is part of the Islamic principles. I think Islamic covers most of, if not all, aspects of ESG. I think the Islamic takes care of the community in a better way, as zakat is one way. But if you look at ethical investments, for example, if I put Sharia-compliant at top or Islamic principles at top, I would say there is ethical investments, which is anyway Sharia-compliant, and then ESG, which is anyway Sharia-compliant. The only sectors you would avoid is oil and gas. But there are a few things to highlight. Commenting also on your question, and the debate happened earlier, like just now, I would say the lack of creating products is time. So you can't compete with conventionals, or simply because they have the history that have been there forever, right? Takes time to develop the market. The growth you have seen in the Islamic finance will continue to be there. Because there's a lot of room to grow the products. Now, what's happening now at the moment, when you look at the ESG specifically, you would see, for example, renewables is a big thing. It's Sharia compliant, it's green, there's energy, etc. That's why everyone wants to tap that market today to get better returns.
Well, if products are certified or opportunities are certified as being ESG compliant, would that open up the large and fast-growing global market to Middle Eastern banks, for example, with a lot of Islamic finance capabilities?
Well, I think today we are seeing a convergence between ESG, Sharia compliance, and impact investing, coming together to build an alliance of goodness. When that happens, some remarkable things happen across the world. And this is happening at the retail level. So in Malaysia, for example, the Chinese community is embracing Islamic finance at the retail level. Issuers in Asia are conventional as well as non-corporate issuers which are owned by Chinese businessmen are issuing sukuks because they are competitive. When an industry becomes competitive, then it has a relevance to offer a product proposition. As was being pointed out, the meritocracy is basically a competitive proposition will attract investors from all kinds of background. So today we are seeing that the Islamic, for example, sukuk can be invested by Islamic investors, but also it welcomes investments by conventional investors, which broadens and deepens the market, and therefore it makes it a more competitive product. So we are seeing all these things coming together and offering a proposition which is very attractive to ESG investors, Sharia-compliant investors, and impact investors as well.
Okay. Pankaj, what sectors do you think are more favorable for Islamic investing?
So, okay, the short answer is healthcare, education, technology. And to be honest, if we were to go by our experience, 95% of the sectors could be done in a Sharia-compliant way. So, but it again depends on investors' mindset, what are their preferences, and how the macros are playing. See, today, if you look at in this region, and which we are very proud of, healthcare is doing extremely well. And I think it is not only an impact investment, it is by default, it is an ESG compliant investment and Sharia compliant also. So there are commonalities between ESG, Sharia compliant, and impact investment, but sector-wise, I would say primarily education, healthcare, and technology.
When we were preparing for this session, I asked my panelists to please feel free to interrupt, interject, but I don't see anyone interrupting or interjecting. I see you also, but in agreement with each other. I'm not liking this.
No, see,
Can we have some contrarian views, please? I'm counting on you, Hussein.
Listen, I think in terms of sectors, given where the market is today, we need to take the macro into consideration. I think technology for us, at least for QInvest, is tricky. Tricky, given where the valuation is, and there's no, I would say, stability in the market and technology side. But I would agree only on the
although that would have been the safest Islamically compliant
Not really.
sector,
I mean,
no?
widest of the sectors are Sharia compliant. Now, I think the real challenge is the fatwa itself and who is the scholars. So if it's Sharia compliant in Saudi Arabia, not necessarily Sharia compliant in Qatar or UAE or Southeast Asia. This is one of the challenges in fatwas. But when it comes to product per se, I just want to comment because there was a conversation here around the mismatch, conventional and Islamic. There's a lot of capital here, Islamic capital. There's a lot of capital in Asia as well. There are not enough products. We're repeating this again, products and products and products. And simply because the market is developing, is not developed. Whereas the conventional is developed already.
I'm not understanding why there aren't enough products, why there aren't enough players. What are the barriers to entry?
Okay, I'll give you the controversial answer. Okay.
Competition.
Controversial answer.
Controversy, competition, something starts with a C, please.
Credibility.
Oh.
See, the fact of the matter, if you look at the industry at large, where the most of the financial product were coming from, Western world, right? And in that part of the world, the concept of Islamic investment was not there. So you look at, bonds, derivatives, where derivatives started.
Yeah,
they didn't start in this part of the world.
Fine.
Right? So if the origination of the investment products is away from the region, which is, or for that matter, Indonesia, Malaysia, they have not seen that kind of the innovation, knowledge, or expertise to develop an investment product. That's why there is lack of product. Okay? But as the world is growing, globalization is going, you will find that there are a lot of parts, with different parts of the world are offering Islamic product. Today, you go to US, you go to Europe, you go to Far East, you go to an emerging market, there are Islamic version is available. Now, your question could be why they are not as popular as they should be. I think that's it's the responsibility of the ecosystem player to spread the education. That is where I think
Are they not as well performing?
they are. So yes, as I told you in the beginning.
Go ahead.
Okay, I'll give you an example. There are sukuks, and I would not name the issuer. At one point in time, it was a few years back, and this is from the region, that the sukuk is not actually a sukuk because it is not backed by asset.
Right.
Right? Similarly, I'll give you example of ESG. In name of ESG, there is a new term called greenwashing. Issuers are raising money in name of ESG, not actually being ESG compliant.
Yeah.
So from that perspective, the basic point is that this industry is just started.
But that's a risk in every industry, and that's a risk for any asset class. That doesn't stop innovation and and new products coming to the market.
If you allow me, just
Yeah.
Unless someone agrees here in where we are now. So basically, the Islamic finance, the question is, where is the hub of Islamic finance?
Where is the hub? You tell me.
It's London.
Okay.
It's the UK. It's not in the region. Would anyone disagree?
I would beg to disagree now.
Okay. So where the products have been developed is London, is UK, right? Where we are competitive as Islamic banks or Islamic investment banks is just the region here, maybe in Southeast Asia. But when it comes to markets like US and you want to do a transaction, I cannot name it a Sharia-compliant if there is, in the absence of Islamic financing there. So that's the reason why the products are not as big as the conventional. If you go to other regions, for example, like let's go to UK itself, which is the hub, right? There are Islamic banks there, but they're not competitive. They're small, and even the retail, the cost of taking Islamic finance is much expensive, more expensive versus the conventional. So the absence of the availability of the Islamic finance in the US and UK and Europe makes it hard for institutions like ourselves to bring Sharia-compliant products to the region. That's one area of looking at it. The other area is what's the strategy, right? Developed versus developing or emerging market, etc. So for institutions like ourselves, we look at the developed market as a matter of diversification, which is US, UK, Europe, and these are our main markets. So the absence of the Islamic finance makes it very, very, very difficult for us to bring every week or every month or every day a new product.
So, go ahead, please.
So, Siba, I think your question was about why has transactions and asset management not progressed. When we go back to the history of Islamic finance, this is an industry which started in the mid-70s. At that time, it was a consumer C2B business. Consumers were coming and creating banks. And the founders had two choices: to wait for a perfect regulatory, accounting, legal framework, trained workforce, and then start the industry. What they did was they said, let's start the industry. We'll call it Sharia-compliant. And they replicated the banking products. And then in that, they did a very good job. But there was another fork on the road, which was banking or asset management. They chose the banking because banking was more acceptable. It was more respectable in our part of the world because if you had a license for a bank, rather than an investment company or asset management company, you looked good. So as a result, asset management was delayed and deferred. Some of the earliest Islamic institutions actually went for musharaka contracts, but then the markets were not ready. So all those musharaka contracts, profit and loss sharing, asset management contracts, yielded negative returns. As a result, the industry went back to the debt-based products. Murabahas, istisna, ijara, and all those products came in. But what happened was that the consumers now have had 30, 40 years of experience, and they were going to their corporate constituencies, the pension funds, the endowment funds, the government agencies, and say, we want our money to be invested in a Sharia-compliant manner. The asset management industry was lacking. There were too few platforms to create asset management products.
Okay.
The transactions were not there. When Hussain mentioned the products, we are all talking about transaction deals, which can create alpha for the takaful companies, for the pension funds, for the endowment funds. So as a result, there's a lot of catching up to do. Now we have institutions like, GII, Q Invest, Jadwa, many others who are doing a fantastic job. And what they are doing is they are educating counterparties. When Pankaj goes and does a deal in India with a secular Indian issuer or borrower, or they are putting equity, he's educating them about the benefits of Islamic finance, or when you do your UK properties. So this is going to catch up with time. But there is a momentum in this area, and today this is the biggest opportunity. To create Sharia-compliant alpha is the biggest opportunity in the investment universe today.
Okay, so we talked about the potential. I want to go back to ESG because while we talked about a potential convergence between Islamic investment and ESG, I would like to bring up the idea of potential competition. If you have a lot of money that is chasing impact investments, or investments that will create impact, investments that are avoiding harm, which is a definition that is common to both ESG and Islamic investing. Are we going to find ourselves, or is Islamic investing going to find itself competing with the ESG label?
See, I don't think they would compete. Okay, there is, as I think Iqbal said, there's a convergence. There's a convergence of Islamic and impact investment.
I accept that they cross each other and there are common areas, but there could also be that this money doesn't want to go to what is labeled as Islamic investment, but will go to what is labeled as ESG, because to be honest, it's marketed better.
So let me ask you.
ESG has marketed itself so well.
Let me ask you a question.
Yes.
You are sitting on tons of money and you want to make an impact investment.
Yeah.
Right? Now you have a product. One is Sharia compliant and one is so-called ESG compliant. And if you get, for assuming everything being constant, better structure, better risk reward, better governance, and better return, Sharia compliant, where would you invest?
You just inserted Sharia compliant.
Yes.
Oh. I would go with the better structured, better risk reward.
I may be oversimplifying it, but in my opinion, there could be difference in the thought process. ESG and Sharia compliant can be interchangeable.
I will answer you. I will answer your question. If the fact that it is Sharia compliant matters to me, then that goes into the mix. That will help me make my decision. But I'm saying, my question was about the money that is looking for all the other criteria, not necessarily Sharia compliant.
Yeah.
In the past, we used to look at Islamic investing and Sharia compliance as that vehicle. Now there is this new vehicle that matches the 17 UN
17 SDG goals, yes.
Yeah. And it also gives good return, manages risk, and creates impact.
Seba, we are not talking about the challenge of where will the funding go. The Islamic finance industry is asset deficient and long in funds.
Yes. So
Islamic finance industry can fund its own transactions, but also find partnership opportunities with ESG. Okay. So that is the solution.
Okay.
Because we have a huge pent-up demand in the asset management space, and we have not even seen the pension funds, the endowment fund, the zakat funds, the waqf funds coming on a stream. But today we have a track record which is more than 50 years. And these individuals are now sitting in decision-making bodies. And they are saying, we've seen these products and these transactions work for us. Therefore, they are asking their corporate constituencies to invest as well. So I don't see a conflict between the two.
Okay. Okay, that's good. Let me ask you about private equity and venture capital access to Islamic investments.
So I think as a player, we are doing all these three activities: private equity, VC, another. And I would go a step forward. That as an institution, we have now got into Islamic digital banking also. So yes, a lot of innovations happening, and we are getting massive response. Not as a player, but we are seeing as an industry, there is a huge demand on the VC side in a Sharia-compliant way, and now we are looking at Sharia-compliant venture debt space also. So again, as we all know, I think we would rightly, beautifully put that very long only on funds, but deficient on asset, huge demand, and we need more players so that we can also, which I think Abdullah said that the cost, if we have more players and more participants, that cost of operation of Sharia compliant or Islamic investment will go down. Because today, if we go to US or Europe, and if we want to take a financing, the legal cost go up because there are less number of players, or there are not enough balance sheet that would like to lend in Islamic way. So from that perspective, I think more players and huge acceptability around VC and PE also.
What about this? My idea of marketing, the fact that ESG is a buzzword now. It marketed itself very well. There may be an opportunity for Islamic finance and Islamic investment to market itself with the younger generation, who want everything sustainable, who want to invest in specifically for impact and nothing else.
That is already happening. So Global Impact Investment Network is bringing ESG investors, impact investors, and Sharia investors together on their platform. There is also a talk amongst the faith-based investors. So both the Catholic and the Protestant Christian, Jewish people, all wanting, and the Buddhists and Hindus as well, all wanting to invest money according to their beliefs. And the Islamic definition of investment is summed up by one word, which everybody agrees, yanfa'un nas. That which is good for mankind. I don't think anybody can dispute with that.
No.
So all that is good for mankind is allowed from a sectoral perspective. And therefore, this alliance is building up, and the Global Impact Investment Network is calling it an alliance of goodness. And that's a very, very positive way to look at the world. And we need more of it.
I agree.
A quick comment only. I mean, Islamic finance needs to take the advantage of the ESG as well. So, those who can do green bonds, green sukuks basically, or green deposits, and they can take advantage of the pricing. That's something, I mean, is developing at the moment in the Islamic finance.
Okay.
The biggest opportunity in this space is that Islamic finance has to issue cause-related sukuks. And for that to happen, the countries have to allocate capital through their decision-making political process for long term. So let's say a country has got a housing problem or a healthcare problem. So the healthcare and the housing budgets are set for 10 years, 15 years, 20 years. And then you put all these commitments into an SPV, and you issue a sukuk, which will allow the governments to use that funding today, because the need is today, it is not tomorrow. And that's where the know-how of Islamic finance and the commitments can create a demonstration effect and be a role model as well.
Do you mind? I know we have. We have maybe a few minutes, but
I think we do. But yes, go ahead.
A quick one on ESG, just to break down them. In the Gulf or the Middle East in general, Islamic countries as well, I think the issue of the E and G is more than the S versus the developed market.
Right.
I think the issue there is more in the S versus the two others. I will basically pause there. I hope it's clear, but that's what I wanted to send as a message. I mean, socially, I think we have charities, we have zakat, we have all of that. Homelessness, people here are much, much, much less than versus other part of the world. But when it comes to environment and governance, there's a lot of things that we need to develop to be there.
To get there altogether. Prakash, your last message?
No, I think like any industry, there are always room to grow. We have to work towards growing this industry, encouraging more participants, creating a lot of awareness, and try to go to those regions, do business in those places where these Islamic investment or Sharia-compliant investment are still unheard of.
What partnerships do you think are needed to grow Islamic investments?
So I think it would be totally driven by the economy and the merit. Like, for example, today, if I were to talk, India is the hot investment market. It's growing wonderfully. So we, as Islamic asset manager, Islamic investment player, we should try to figure out how to do deals which are done in a Sharia-compliant way in India. So what you are doing, not only bringing awareness here about India, when you are going to a market which has 1.4 billion and you are saying that I can do married deal in a Sharia compliant way, you are making those players aware of it. So I think that's how, and I think another important thing is that we should have more independent directors from different parts of the world on the board of investment companies. I'm very pleased to say we have a wonderful guy who is the chairman of Berkeley Research Group, and he is on our board, Dr. David Teese. And when he goes to University of Berkeley, talks about how investment company is doing profitably and efficiently, they are spreading a word among the best of the student that yes, this is something can be done. So I think that is another way. And we should try to collaborate with universities, which we do and we believe in. And education is being a Sharia compliant investment. Try to collaborate with university and spread the word and awareness about Sharia compliant.
Right. Anything else? Right.
I think from my side is we're talking about how we can develop it, develop the Islamic finance further. I think the private equities, private debt and GP strategies globally, the top 20 asset managers in the world today, as of today, they have zero, Sharia-compliant funds. It's our job, it's our role to develop that. I think that's an area would be, actually it's a conversation at the moment. I think this is something we would welcome. This is something I think it's hot, and that's a way where you can create basically the momentum where you can direct these capitals there. They have the experience, but they lack the experience of Sharia compliant and how it works, which is basically our role to educate them.
I think that would be definitely a measure of the success of all the action that is taking place here. Iqbal?
So I think that when we look to the future, investing into companies which are role model companies, are run on, as Pankaj talked, meritocracy, are governed well, and these are institutions which are built to last in the private sector. Institution building is the only way to build countries. When you invest into good institutions, make them better, take them to public markets, you create a middle class. And when you create a middle class, you bring the hope of stability. And that, to me, is the biggest important role for Islamic financial asset managers.
Well, I wish you all the best and the best of luck. And I hope that next year we can sit together here and talk about some more innovation in Islamic products, and we can talk a little bit more about some of the larger funds that have more of those products on their books. Thank you very much.
Thank you for having me.
Joining. Thank you all for attending this.
Thank you. Thank you.
Thank you.